On to the latest business news now on the programme. We're going to check in at the beginning on the health of the Chinese economy, the world's second largest, of course. Its performance since COVID-19 restrictions were lifted in late 2022 has rather disappointed international markets, and Shop Pellegrin Business Editors is here. So what are the latest figures tell us then, Shop?
Well, Stuart, they paint a more positive picture than we've seen in the past few months, with many figures actually beating analysts' expectations, although there are, of course, still areas of concern. This is in part the result of the beefed-up support the authorities in Beijing have provided for the economy, whether it's the property and banking sector or its currency. The National Bureau of Statistics, which released the latest data, remained cautious in its assessment, though pointing to a risky international context and to the fact that while domestic demand has improved, it still judges it to be insufficient. Authorities say they are on track to reach the objective of 5% GDP growth this year. So let's have a look at some of the key figures now. Annual GDP growth in the third quarter was at 4.9%, ahead of analyst expectations of 4.5% increase. Retail sales, while low, also beat expectations, increasing year on year at 5.5%. Industrial production, the main driver of growth in the past 3 years, expanded 4.5%. But demand for Chinese exports could be affected by the volatile situation in the Middle East. Fixed asset investment rose 3.1% since January, and the country's lagging real estate sector continues to struggle. Property investment down 9.1%. Nonetheless, this latest data has pushed analysts at Nomura, for instance, to upgrade their forecast for Chinese growth this year from 4.8% to 5.1%. Staying in China with a check-in on the Belt and Road Forum, gathering representatives from over 130 countries who signed on to China's signature infrastructure initiative gathering here in Beijing, as you can see in the Great Hall of the People. In his speech during the opening banquet, Xi Jinping defended the $1 trillion initiative from criticisms, and Georgina Robertson has the details on this.
A vast forum for a vast project. In the Great Hall of the People, Chinese President Xi Jinping marked the 10th anniversary of his signature Belt and Road infrastructure policy, a project with lofty economic and ideological goals.
When China does well, the world will get even better. Through the Belt and Road Initiative, China is opening its door wider to the world.
The Chinese president went on to describe a win-win project while speaking to the gathered leaders, with representatives from more than 130 countries present, as well as Antonio Guterres of the UN, who in the past has praised the BRI. The Belt and Road Initiative has provided resources for the Global South. From 2013 to 2021, during the Belt and Road Initiative, China's development finance institutions provided $331 billion of funding globally. For the same period, funding for Africa was $91 billion. This financing is focused on lending for industry and infrastructure and is directly credited with fueling growth. But the project has led to debt distress for some countries, exacerbating their financial struggles. For example, Laos's total debt to China from 2000 to 2018 was measured at over $12 billion, around 65% of its GDP. The project has also come under criticism for its environmental impact, notably the use of fossil fuel power plants, which emit 245 million tonnes of CO2 per year. In 2021, China promised to boost its clean energy development and shift fossil fuel investments.
Let's have a look at the markets now. The major Asian marketplaces going through a bit of a roller coaster this Wednesday after following in the U.S. footsteps by trading lower because stronger than expected U.S. retail sales raised fears over sustained high interest rates. The economic data coming out of China reversed that trend somewhat and for a short amount of time, but not enough to get Chinese stocks selling again. As you can see, the Shanghai Composite down 0.8%, the Hang Seng in Hong Kong down over 0.1%. And we're also seeing a cautious opening on the European marketplaces, concerns over those higher interest rates in the U.S. following those retail sales figure I mentioned playing a part here, as well as the developments in the war between Hamas and Israel. UK inflation in September stayed at 6.7%, the same as in August and higher than expectations. That's why we're seeing the FTSE in London trading flat, almost lower. And finally, a check-in on the oil markets as well, also going through a roller coaster ride in the past week or so in the wake of that deadly explosion that killed hundreds of people in the hospital in Gaza. Fears are rising of an escalation of that conflict to the wider region, threatening oil supply. That's why we're seeing oil prices surging as a result. The West Texas Intermediate, the U.S. benchmark, over $88 a barrel. And Stuart, the Brent crude, the North Sea benchmark, trading over $91 a barrel.
Thanks so much, Jean Pellegrin, our business editor here on France 24. Going to take